What's going on, guys? In this video and this episode of Should I Invest, we're going to talk about AEHR, and this stock has really been on fire. So I got my MARKETSMITH tool here. This is a wonderful handy dandy tool. I have my Excel sheet that helps us with long-term research, and I also have Yahoo Finance. Now, a wonderful feature about MARKETSMITH is that it allows you and gives you trade ideas. So the last trade idea it gave was on AEHR, actually saying to enter right at this pivot, and ever since that entry alert, it is up 32%. All right, so these are the little neat things that MARKETSMITH gives you guys. If you guys haven't already signed up, go ahead and do so. Link is down in the description. But without further ado, let's dive right in and start doing research on AEHR. So we're going to plug in AEHR here. We're going to see what the Excel sheet provides. All right, so we got our stock price, market cap, shares. We have an EPS of 0.43, which is great. The PE is not what we're looking for. It is in the red, but we're going to go and look at return on equity. All right, so when we're looking at return on equity, we're going to use MARKETSMITH, and we're going to jump right in right here on this area. All right, we have a return on equity of 37%. Perfect. So we're going to plug this in, 37, and we're going to get a nice green figure. All right. Now the next one we want to look at is total debt and total asset. All right. So the total debt to asset ratio. We're going to go here in financials. We're going to check the balance sheet, and we're looking at total debt to total assets. All right. So what do we have here? We have total assets 63. Let me see here. Yeah, 62,328. All right, so we're going to put total assets here, 62,328, and we're going to go look at total liabilities, 11,000. These numbers seem significantly low here compared to what we're used to here. Okay, so here we go. We have a total debt to asset ratio of a positive figure. Great. Now we're going to look at total current liabilities. So total current liabilities, 60,000. Comparison to total assets, you can see their short-term assets are currently pretty high. Now we're going to go and look at total current liabilities. That's 11. We're going to plug that in. Perfect. All right, so looks like we have yet again another positive figure right here at 5.45. So not much difference between these two, but it's still a positive thing, and we can continue on to the next one. Next, we're going to go and look at operating income and total revenue. All right, so total revenue right here, 61,058. We're going to plug that in right here, and then we're looking at total operating income, 12,000 there. All right, so we got a 20% rule here. Okay, so that works as well. Another green figure right here on AEHR. All right, so now the next thing we want to look at is cash flow increasing or decreasing. So we're going to jump into the cash flow tab here, and we're going to take a look. It does look like they've gone from negative 5,000 to negative 2,000 to negative 2,098, 1,000, and 1,100. So I would say, based on the information that we're given here on Yahoo Finance, this is increasing. Now we're going to go look at percentage owned by management, and to do that, we're going to jump back to MARKETSMITH right here. This tool right here is telling us management owns 11%, which is usually a little bit higher than what we're used to seeing, but that's a great figure. All right, now we got to come over and look at the ownership of the funds. Is it increasing or decreasing? All right, so we're going to look right over here, and we're going to pay attention to these figures right here: 18, 19, 28, 47, 50, 45, 52, 81. So significantly being loaded up here in the last, quarter here in December 2022. All right, so to answer the question, is it increasing or decreasing? It is definitely increasing. So greens across the board, with the exception of PE here, and significantly on the pass side here on this Excel sheet. All right, so let's dive right in. Does this mean you buy this at the highs of where it is right now? Obviously, we know what happened in the last year, where everybody started buying things at the top, and they got stuck in pullback situations where it drastically hurt them. All right, so ideally, because we're at highs, what you want to do is start with maybe a 1/10, 1/7 position size. So anytime this does pull back to possibly retest that pivot, you can average in, and get yourself a nice average. Remember, once you start getting your full position on, you have other areas to start kind of securing or building yourself some insurance. All right, you could sell calls against your position, and if you want to get in at a lower price but you're afraid it's going to keep going, you could sell some puts. All right, so hopefully you guys did find value in this video. If you did, go ahead, smash that like button, comment down below what next stock you want me to look at, and we'll do the exact same thing we've been doing for the last few weeks. Thank you for watching, and we'll catch you on the next one.